Now, yesterday, one of the charts we looked at as well was the cable, the British pound US dollar on the 180 for a potential Momo. Now, let's backtrack a few candles. I'm going to go back into replay mode, and this is a 180-minute chart, so basically I'm going to replay back a day, which means I'm going to go back basically 8 candles. So this is where we were yesterday. Okay, this right here is the 6 a.m. candle for the 5th, and that would have encompassed where we were during the chat yesterday at 8. So this candle will go from 6 to 9 a.m. 24 hours ago. We had the downtrend line. Let me make this a little bit bolder. We had the downtrend line here. We had an uptrend line here. Two of them. Two downtrend lines, two uptrend lines. You can see the other ones. We had a balance pattern. Well, actually had two balance patterns. There's the downtrend lines. Here's the uptrend line. But what we lacked, now when I say balanced pattern, what does that mean? That means the angle at which this downtrend line is coming at the uptrend line, the way they're coming at one another. You can see that we're looking at a kind of wider triangle with the less shallow lines, and a little bit narrow of a triangle with the steeper lines. Okay, and if you pair either one of them up, you'll see that you create a pattern with that kind of balanced, symmetrical angle. You know, imagine folding the pattern in half; they would line up on one another. So we had the pattern balance, but what we did not have was price balance. And price balance means our actual price is trading within that middle third of the pattern. Are they respecting both the resistance and the support of the pattern? So right now you can see the pattern was definitely favoring yesterday the bottom half, okay, of the pattern, the bottom third, I should say, of the pattern, and that gives us a lack of price balance. Now you move forward to today, current, you can see that we're in a situation where there is more pattern balance, or the pattern balance continues, it persists. The price balance is a little bit better. In fact, we could have arguably pierced this downtrend line back at the 3 a.m. candle, the 3 to 6 a.m. candle this morning. We could have arguably pierced that, and we would have had positive MACD during that. But it's hard to say. You know, when you're drawing these lines manually, you really need to be spot on. I have a feeling that you can see here, I just extended it out. You can see that it was really close. I'll blow it up. You can see what I'm talking about. Let's just get this right on. Oh, let's just redraw that here. So I'm going to grab my segment tool. We'll start at that same point. Let's blow this up a little bit. So there I am right there. So yeah, it pierced it, didn't it? No question about that. It pierced it. Just wanted to extend it out and make sure I hit those touch points perfectly. It pierced it. So with that positive MACD, now the question here is, and let's squeeze back the market memory. The question here is, our problem, which was also a problem yesterday, was the wave. You know, yesterday it was a situation where, oh, it's under development. The lines and levels are pretty fresh. First trading day back. We really didn't have that flat wave yesterday. Now the question here is, take a look at it. We're in market memory. In fact, I'm a little bit, probably got about 5 weeks instead of 4. But you take a look. Do we have that 3 o'clock wave? No, we don't, do we? That's the problem. I could draw all the lines in the world. I could look at all the MACDs in the world. But the bottom line is we still don't seem to have a good, decent flat wave. Now, of course, when it comes to longer time frames, and the longer the time frame is, we give the wave a little bit more, flexibility. For 30 minute, setup, or even a 15 or 60. I'm pretty strict about my interpretation of what a flat wave is. I want that thing to be pancake flat, because in the world of having, 48 new candles on a 30-minute chart, 24 new candles on a 60-minute chart, I can afford to be a little picky. I'm just having more opportunities present themselves due to the sheer number of candles. Okay? On a 3-hour chart like this one, the 180 minute, or a 4-hour chart, I'm only getting 8 and 6 new candles respectively. I don't have that luxury of being a little bit more choosy, so I'll tend to give the wave a little bit benefit of a doubt. But really, here, I think it's pretty easy to say this is more of a 2 to 4 o'clock wave. It's never quite flattened out. It still has a little bit of angle. We can see the way price movement is behaving. This is easy to say a 2 to 4 o'clock wave. Okay? Now, if that's the case, what I would like to see is some sort of horizontal resistance or support that would allow me to play inside the range. That would be the ideal situation here. But again, I think that this week is going to be, again, kind of getting past that holiday price action, kind of giving the market a week of just good, solid, full volume, full participation action, and looking at the setups, knowing that the wave and our indicators and even our trend line is going to be affected by that 2 weeks of holiday trading. And it is a good solid 2 weeks, isn't it, of holiday trading. Within those 2 weeks, we had Christmas and New Year's Day, which markets are closed. We really had 8 trading days, really. And I don't count really Sunday as a trading day, even though the market's open. I wouldn't call that full participation. It's just basically the Asian session, really, that's represented by Sunday. Okay? So the challenges persist. In this case, the challenge presents itself not so much in the indicators for confirmation being unsure. I think the MACD was fine. Not even the pattern. I think the pattern price balance and pattern balance was great. It's the wave itself. It's really step one that took the wheels off this wagon. Without that solid cycle indicator showing me the right market cycle for the right setup, in this case, sideways market for momentum trading, really everything else is a moot point. Okay? Including this trigger, which, let's go back in time one more time to show you what I mean. Take a peek. I'm going to go back just to that candle. Is that a 3 o'clock wave? And I'm in the market memory for sure. Is that a 3 o'clock wave? That's the question that needs to be answered. Okay? Now, if you feel it's 3 o'clock enough, or you're comfortable with taking an aggro, that's fine. If you're comfortable taking an aggro because you're saying, it's pretty close, it's, I don't see that's a great argument there, but let's say you did. The trade is still valid, and it's hanging in there. It bounced off 4,500, and you're just taking a whole heck of a lot of heat right now. Now, this is a 180-minute chart. This is 200 pips of heat. I could hardly justify 200 pips of heat for an intraday 3-hour chart. I could hardly justify that. This would have to be a situation where we would cheat the stop in, because I'm not going to give a setup like that 200 pips of wiggle. It just doesn't make sense to me. I'd probably, especially if it's an aggro, under the context of this trade only being a valid trade if we considered an aggro, you would have trailed the stop much, much closer. So chances are this thing would have dipped back below 4,700, made you pretty uncomfortable. Your stop would likely have been cheated up somewhere near the low of the breakout candle, and that would have positioned you. And let me blow this up here. The candle that we're talking about here is this up candle here. That would have put you somewhere around 45.80. Now, that still hurts a lot, but this would have had to have been that situation. The bottom line is, was this an ideal trade? No. Was it a textbook trade? Not even close. But I wanted to show you some of the nuances as to how we discuss what a good momentum trade would be versus one that might be a little questionable. And like I said, there's probably a pretty good argument for making this an aggro entry, and I just wanted to at least entertain that and talk to you how you're your steps would have been once you decided to take an aggro trade. Now, also realize the only reason you would have come to this, I think triage is the part that we can't necessarily foresee right now, which is, the only reason you would have taken this trade is if there was nothing else to take, because part of triage, the steps of triage, is prioritizing, which are the actionable charts. There may be more than one of them. There should be more than one of them. Okay, triage is going to be prioritizing those actionable charts, looking for those good setups, not the aggressive ones, the textbook ones, or as close to textbook as possible. And then looking at the risk rewards, and through that process, triaging which would be the actual setup to take. That's the part that we have to always kind of assume is happening in the background. I have to assume you're doing that, right? Okay, so there's a look at an aggro setup on the 3-hour cable.